Good afternoon, ladies and gentlemen. Good afternoon, ladies and gentlemen. Please join me in welcoming our webcast viewers. My name is Fred Mifflin, President of the Canadian Club of Toronto, and viewers, we're very pleased that you're joining us today. For 120 years, the Canadian Club has been proud to provide a forum for leaders in every aspect of society to share their thoughts and ideas with us and to challenge our thinking. Through our programs and activities, we offer access to dynamic business, political, and public figures from across Canada and around the world. Our Global Leaders series is a great example. At a time when the world is becoming increasingly inwardly focused, this series celebrates our business leaders who are taking bold steps both at home and beyond our borders to create opportunity and prosperity here in Canada. Like our guest speaker today, Don Guloien from Manulife. Before I formally introduce Don, here's a preview of some of our upcoming events. This Thursday, March 2nd, Barry Perry, CEO of Fortis Inc., will continue our Global Leaders series to talk about the strategic transformation of Fortis from a regional electricity utility into a top 15 North American energy player. And on Tuesday, March 28th, Sam Sebastian, Vice President and Country Head of Google Canada, will be at our podium. To order tickets or to learn more about the club, please visit us at canadianclub.org. You can also join the conversation via Twitter or Instagram by following us at CDNCLUBTO or by using that hashtag. I want to express special thanks to today's event sponsors, Borden Ladner Gervais, represented by Sean Weir, and Scotiabank, represented by Dieter Jentsch. Thank you for your generous support. Let me also acknowledge the youth and young leaders from Branksome Hall who are with us today. Welcome and thank you for joining us. And now today's guest speaker. Asian stocks continue to rise with strong interest from international investors. Whether it is China, Japan, South Korea, or elsewhere in the region, businesses are exploring the many possibilities Asian markets provide. While many are exploring, Manulife already has a well-established presence throughout Asia, with almost 70% of the company's core earnings generated outside Canada. Manulife is truly a global Canadian brand. Today's guest is a highly regarded global investment executive. Since 2009, Don Guloien has served as President and CEO of Manulife, one of Canada's largest and oldest insurance, wealth management, and diversified financial services companies. A 35-year company veteran, Don has provided leadership in almost all aspects of Manulife's operations. Prior to his current role, he served as Chief Investment Officer, responsible for Manulife's worldwide investment operations. In 2004, he was instrumental in integrating Manulife's investment operations with those of John Hancock in the United States. Don has been named International Business Executive of the Year by the Canadian Chamber of Commerce. His leadership has also been recognized by Glassdoor.com, the popular recruiting site that also provides CEO approval ratings. He's one of the site's highest-rated CEOs. Among the many organizations that he lends his time to are the Mayor of Shanghai's International Business Leaders Advisory Council, the Business Council of Canada, Canadian Life and Health Insurance Association, the United Way, and the University of Toronto. We're pleased that Don will be joined in conversation with Canadian Club Vice President Bruce Sellery. Bruce is a personal finance expert, radio and TV host, and author. I also want to remind you that Don will take any questions you have, so please complete the Q&A cards on your table, and one of our staff will collect them. So, gentlemen, welcome. The Canadian Club of Toronto's podium is yours.
Thank you very much, Fred. Appreciate it. Hello, everybody. You've eaten, you're all set, you're ready to go. The acoustics in this room are super weird, so I'm going to speak with confidence and hope that you can all hear us. How you doing, Don?
I'm doing well, Bruce.
Your business is everywhere, like everywhere. So we're going to spend a little bit of time on FinTech, Canada, US, but we are going to begin in Asia. And my first question is, what's Don's Asia? So you get off that crazy flight, it takes you like a day to get there, whatever. What is the first thing you do when you land?
It depends on where I'm going, Bruce, but my Asia is all Asia. We operate in 12 countries in Asia. They're all very, very significant operations. Each of the markets either are or will be as big as Canada within the near future. So Asia is our opportunity. The only exception to the rule where we don't operate is Korea, South Korea, and India, but virtually all other countries in Asia we're operating.
So do you go for a meal? Do you go for a walk? After you've had your nap, what do you do?
I don't go for a nap. I go for a nap on the way over. I sleep very well on a plane. I can get on a plane at 10 o'clock in the morning and sleep all the way over to Asia. I get off and typically go...
Without medication?
Without medication.
You do not drug yourself on the flight?
I do not drug myself on the... Well, it depends on what you include. A couple of glasses of red wine, but
doesn't count.
It doesn't count. No.
I'm talking like a half bottle of Ambien.
No, none of that. No. And then I get off the plane, have a quick shower, and go out to dinner, and it works out really well.
What is the number one cultural difference that people who haven't done business in Asia would not appreciate, would not know? Because we see it on TV, we've talked, we know that many Canadians, many international business leaders are successful there, but the culture is very, very different.
Well, the first thing would be there's no such thing as a culture of Asia.
Yeah.
Because Asia is actually a polyglot of a number of different countries, all of which have quite different cultural norms. And you can't think of it as one country. It is a region of the globe, but very fundamental differences in the cultures in each of the countries.
How would you describe, in China in particular, their behavior around money culturally and how that fits with your business? So stereotypically, they're big savers, they love property, they save in cash, they have a great deal of respect for their elders. Those are just stereotypes that people have about China. How do you need to navigate the cultural hurdles to do well there?
Well, actually, you're touching on one thing that actually is common across Asia, and that is a deep love of family. And when people get above the basic subsistence level where they can provide food and clothing, they very much turn to saving for the future, to put their kids into good schools, to provide for health care, to support aged relatives or their children. And you mentioned the saving. It's a great saving impulse, but it's a really desire to make the next generation's opportunities better than they had themselves, and also to provide for their elders in a very meaningful way.
Is that following through with the millennial generation there? Are they behaving as their parents did?
It's interesting. A lot of people, in our generation are when polled, will say, "I'm not sure I can count on my kids supporting me the way I supported my parents." And we talk about the sandwich generation here in North America. They really have a sandwich generation because they're supporting their kids, they're supporting their elders, but it's not 100% clear that the kids will support them the same way, which is creating a double incentive for saving.
So you have seen great growth across the Asian region, Manulife in particular has. What's the outlook for growth over the next 5 to 10 years?
It's fantastic. The GDP growth is very high in most of the Asian countries, I guess with the exception of Japan, 5 to 7 or 8%. And for us, the addressable market is the middle class. So as more and more people are moving into the middle class, as a general rule of thumb, we can experience growth that is roughly double GDP growth. So you're talking 15% a year. And that's not including taking share from other companies or introducing new products and new lines of business. So it's very fast growth throughout Asia. We now sell 70% of our insurance is sold in Asia, not in Canada or the United States. 70% is in Asia. Canada and the United States represents 30%.
Do they buy differently when it comes to insurance? Or is the product selection what they latch onto similar?
It's somewhat different, but it's the basic need of providing better for their families in contingencies involving ill health or death. You mentioned savings. They're also prodigious savers, and we're selling a whole range of wealth products and pension products and other things that are helping people provide for the future.
You've done a number of big partnerships, DBS, Standard Charter. What's the strategy on those?
The strategy is different. In the case of Standard Chartered, which was done more recently, I often say to our investors, I care about margin more than market share. And it's true, but in the case of Standard Chartered deal, it's both. We had the number two position in the mandatory provident fund business, which is defined contribution retirement savings, like 401k or Group RRSP here in Canada. We know that to the larger scale players, you're going to get certain benefits because we're all trying to bring down fees in that market. The regulator wants us to bring down fees. That's going to squeeze out some of the smaller players. So we did a deal with Standard Chartered to buy their existing business, which was much smaller than ours, and also a deal with them going forward to grow the business more rapidly than they could. And we've now become number one market share in the mandatory provident fund business in Hong Kong, which we're very pleased. And so we'll be reducing fees as time goes on and taking probably bigger share of the market. HSBC is a really fine company, but they're now number two. And remember, it wasn't too long ago the HSBC actually issued the banknotes in Hong Kong, so they have a sort of an inborn competitive advantage there. The DBS deal, we had a medium-sized operation in Singapore. DBS is one of the world's most digital banks, a really fantastic bank, and we did a regional deal with DBS in Singapore, in Hong Kong, in China, and Indonesia. And the deal has gone off very well. Our sales in Singapore the last 2 years are up 500%.
Of the many leadership characteristics you have been working on throughout your career, which one do you call on the most when it comes to leading in Asia that might be different than the skills that you would pull out of your toolbox in Canada or the US?
Probably listen first, talk second. That doesn't mean I necessarily, for people who know me, I don't do that in North America. but when I go to Asia, I try and do that. I can see John Lyon laughing there.
Right, so that's something. And why is that important culturally?
Well, it's very important, I think, quite honestly, in any culture, but very, very true in Asia, where the first stage is getting to know people. And as you get to know people, business comes later, and you don't get to your business issue or proposal very fast. You get to know people first. It's also very important to listen to what people say, because people in different cultures will express what they want or how they're approaching a problem in quite different ways, in subtle ways. And if you're not a very good listener, you're going to miss the nuance.
There was a time when on that flight, you would have had executives from Manulife, from BlackBerry, from SNC, from Bombardier, from many, many other Canadian companies. Does it feel a little lonely in Asia as a Canadian these days?
Yeah, thank you for asking that. Yes, it does. In Canada, we have a wonderful opportunity that we can sort of roll out of bed, and we've got a neighbor to the south, a very friendly neighbor that speaks the same language as us and has a market that is 10 times the size, the United States. But, only lazy people stop there. There's huge markets developing in Asia, fantastic demand, and it is really sad. I'm not the only one who said this. Mark Carney used to say this. The Scotiabank is present in many international markets, thank goodness. But not enough Canadian businesses are taking advantage of the fantastic opportunities internationally, but particularly in Asia. Most people don't have any clue that Indonesia is a country of 270 million people. It's a gigantic market, and that's really sad. And the number of Canadian companies that are taking advantage of those opportunities have diminished. The young ladies are here from Branksome Hall, and Branksome Hall actually has Branksome Hall Asia, a school. So you've got, in the educational field, in a private school for young ladies, a sister school being run by the Canadian parent in Korea on Jeju Island. There's an example of forward thinking that is being exhibited by a school for young ladies, and yet many businesses aren't taking advantage of the opportunity the same way as Branksome Hall is.
What are the strengths that Canadian businesses and Canadian leaders have in the shifting political landscape? So there's going to be a lot of talk in the next 4 years about US-Chinese relations. How is that for a Canadian executive? Have you added a Canadian flag to your backpack?
People love, the Canadian flag has never been better, and but it's always been good. Canadians are universally trusted, seen as people who will cut a reasonable deal, not try and take advantage of people. These are gross stereotypes, but they happen to be very positive stereotypes that exist through most of the world. We in Toronto come from a very multicultural community. So if you're actually, just living here, you're going to get exposure to a lot of different cultures. We tend to be open-minded, not thinking that people have to live and think and behave and speak exactly as we do. Those are all characteristics that make a nation more likely to be successful in international markets.
I'm going to throw in a question here as it has come. What advice would you give to Bill Morneau to help raise Canadian productivity to more competitive international levels? So many countries in Asia have productivity numbers that are different than ours for lots of different reasons. What advice would you give to Morneau?
Well, I think there's a bunch of things. Number one, we've got to increase the number of graduates that are coming out of STEM programs, science, technology, engineering, math in Canada. We're actually quite good at things. If you look at what's being done in the auto parts sector, some of the most sophisticated assemblies for the best cars in the world are being manufactured here. This is not low value added stuff. This is high engineering components. So we're certainly capable of it. A Japanese CEO who's in the bearing business says that Canada is second only to Japan in terms of being able to produce highly machined ball bearings that are used in very sophisticated instruments and so on. So we have the capability of doing it. We just need more people doing it. The other thing that we've suggested, not because we have an operation in Waterloo, but you've got Waterloo, which because of the university and culturally now has become a hotbed of innovation. But you've got the market here in Toronto with all the money, all the big employers who have lots of employees, and all the power, quite frankly, is located in Toronto. It's on a good day a 2.5-hour trip, right, on the 401, and not a pleasant one. And we had a couple of cabinet ministers in at a lunch, and I said, you notice there's nobody here from the tech sector because they basically have to invest a whole day in order to get here and have lunch with you guys. And as important as you are, they're not going to do that. We probably need a high-speed train corridor, built between the two. In China, you can go from Beijing to Shenzhen, which used to be you'd spend 4 hours. By the time you got to the airport, went through security, flew, got out. And you can jump on a train, you're there in about 25 minutes. A very pleasant train. It's,
wow.
And you get a drink on the train if you really needed one. And,
some of that medication you were talking about earlier.
Well, before you know it, you're there. You can eat a meal. You can, it's all Wi-Fi equipped. It's beautiful, lovely train. And so you can be up to Shenzhen for a meeting and come back and, anyway, they know how to do it.
Do you foresee a U.S.-China trade war? How would this affect your business in Asia?
Well, what is my opinion worth on whether there's going to be a trade war? I think, everybody who's studied a little bit of history knows that Smoot-Hawley, cost the world's economy an awful lot. And sure, there's a bit of a pressure to renegotiate some elements of trade, but I don't imagine there's going to be an out-and-out trade war. But there certainly isn't going to be a trade war between Canada and China, or Canada and any other countries that we have fantastic trading relationships with.
Growth has been so strong in China. How soon before it becomes your core business?
Well, China's only a part of our story. China represents about 8% of our global business. We have a third of our business in Asia as a whole, but there's Japan, there's Hong Kong, there's Singapore, the Philippines, Vietnam. We're growing very, very rapidly in all those places. Indonesia, Cambodia, a wonderful operation in Cambodia. So we're growing in all those places on average about 15, 20% a year.
There's a question here about a focus on minor cities. So many of the big cities in Asia are what drive the GDP. Would you focus on minor cities to bring bigger influence?
Yeah, we do. I mean, some places in Asia are city-states. So Singapore and Hong Kong are an example where, if you're in the city, you're basically in the entire country. But China's example, we have the broadest geographic footprint of any foreign company in China. We have licenses in about 53 or 4 cities. You have to get it on a citywide basis, and plus we have access through the internet to the entire Chinese population. But we have people on the ground in more cities in China than any other international company.
I want to shift to the U.S. There has been a lot of news coming out of the U.S. recently, and under this umbrella of leadership and global leaders, very different political environments. How do you lead in such a charged political environment?
Well, the United States has chosen their president, and you work with it. Canada has great relations with the United States, has for a very long period of time, certainly all my lifetime and the lifetime of anybody here in the room, and we will have with the present administration. I think it's wonderful to see Canadians of different political stripes coming together, and I think people know that Prime Minister Mulroney, Rona Ambrose, others who have connections with the current government in the United States are actually helping our government in Ottawa, even though they're from a different political background, are working together to make sure that Canada maintains the best possible relationship with the United States.
There is so much optimism about the economy in the U.S., its tax cuts, its regulatory changes. There's lots and lots of optimism. How optimistic are you?
Very optimistic. I've been optimistic for a long time.
Even prior to Trump's election?
Yeah, I mean, people are crediting this with the election, and I'm not going to get into anything there, but the fact is the U.S. economy has been doing well for a very long period of time. I mean, median wages in the United States have gone up 5.3%. The first time, that's not a small number, the first time in over 20 years that has happened. And that statistic came out in the summer. Essentially, you've had full employment in the United States for the better part of a year. Lots of pressure on inflationary pressure. In fact, I think our average salary line in the United States is 3%. Not that we're giving away, we don't pay our employees any more than we need to, just like any other employer. But you need to in order to keep your people in the United States. So that's sign of a very positive economy. In fact, the Fed has been, I think, a little gun-shy in their actions, and the Fed is actually a lagging indicator rather than a leading indicator, and some would argue that the Fed is, I've not tended to be a critic of the Fed until more recently in the last maybe year and a half, where the Fed is actually causing, I think, some concerned people. They say, gee, these are knowledgeable people. If they're not raising interest rates, there must be some weakness in the economy. Well, guess what, people? There is no weakness in the U.S. economy right now. Mr. Trump came in at a terrific time, but he inherited a fantastic momentum for the U.S. economy.
What are the risks?
I mean, 4.7 unemployment rate. It hardly gets better than that, right?
Yeah. What would you say the risks are to the U.S. economy?
Well, the risk would be something geopolitical. The risk, as you said, trade is a very tricky thing. It's very hard to impose, new burdens on trade without having a compensating reaction.
There are many knowable unknowables as it relates to the rollout of Trump's policies. You've been quoted as saying Dodd-Frank the repeal of that isn't going to be a big deal for Manulife.
Right.
What are some of the variables that you're focused on? Is it corporate tax cuts? What else would affect the business of Hancock? What else would affect Manulife?
Not very much, but I think in general, people talk about the Department of Labor, they talk about Dodd-Frank, a few other things, tax reform. None of those things has a huge direct impact on our business, but I think if there's more sensible deregulation in the United States, and particularly around the banking sector, which is more affected by Dodd-Frank than we are in the insurance sector, and insurance and wealth management sector, that could be very positive for the U.S. economy. And we always have pendulums. Anything in human civilization has pendulums. So we had the great financial crisis, and then a whole bunch of things were passed to make sure this will never happen again. It's not unnatural to expect that the pendulum swung a little too far and needed to come back. So I suspect that any government coming in, whether they be Republican or Democrat, would be taking a fresh look at some of the regulations, particularly in the banking and financial sector, that may be a little bit excessive. I think that's probably true in other places too, where governments have a habit of creating a little bit too much red tape.
Hancock's a big business in the U.S.
Certainly is.
What is the long-term growth strategy for that part of your business?
Well, the area of greatest emphasis for Manulife globally is Asia and global wealth. And it comes as no surprise as the pool of wealth in the United States is bigger than that of anywhere in the world, and we're being very successful at it. Everywhere from a retail level through mutual funds to 401k plans to selling to the largest pension plans in the world. And, so wealth is a huge component of what we do in the United States. I mentioned that 70% of our insurance is now sold in Asia. Canada and the United States split the remainder, fairly evenly. But that's not the fastest growing element of the U.S. economy by far, and certainly not the fastest growing segment of Manulife's business globally.
How are you playing things on the investment side? The Dow seems almost safely above 20,000, at least for now, but it's a pretty high level.
Well, we have an incredibly diversified portfolio, and we invest in real assets as well as things like stocks and bonds. So we're investors in the entire economy, not just the stock market. Stock market is a little piece of it, but we also have very extensive hedging programs on our variable annuity risk and so on that, we're interested in the market, but that's not the thing we think of first thing in the morning and last thing at night.
This question I'll put in this part of our conversation, tangentially related, but how do you see the growth of the number of women in the business industry in the next 10 years?
Well, that's a great question. It should go up. Diversity in all forms is a wonderful thing. So I'm not going to just talk about gender diversity, but half our population is female. I don't think you have to go too far to figure that out. And it's kind of a shame when companies are, thinking it's like sending a rocket to the moon to have 25% of their boardroom be women. Or 25% of their executive ranks. And, we sign on to the Catalyst Accords early. I'm very proud that my my chair was Gail Cook-Bennett, who was the first person to aspire to that role, or the first person to take that role as a woman, a chair of a large publicly traded financial institution anywhere in North America. Enormously proud of that. That's a very natural thing. But diversity in all forms, whether it's racial diversity, whether it's cultural diversity in the way people comport themselves, LGBTQ issues, we think all forms of diversity make for a richer, more intelligent, more sensitive workplace.
I don't have the latest number, but a year ago the number was 20% of the top 500 companies in Canada did not have one single woman on their board. When you talk to the CEOs of companies and board chairs, one of the things that they will say is that they can't find people with the expertise in their business in order to qualify them for a position on their board. Given your passion for diversity and inclusion, what would you say to those board chairs, to the nominating committees, about including more gender diversity on their boards?
Well, I think it's dated to say that you can't find people. I mean, it goes back, and there's a famous quote of somebody years ago said that, and they're actually a really good person, and I don't think he quite meant it that way, but that's a dated concept. There's lots of people, and boards should not be filled with people who know the core business of the company. One of the real strengths of a board is to have diversity, and I give it's too long. I give a lecture on that in terms of risk management. That if when we went into the financial crisis, some of the boards of the companies that did most poorly were the best boards in the world if you judged by the credentials of the people. But they all went to the same schools, they all went to the same watering holes, they all thought the same, you had groupthink going. It would have been far better for the boards if they had a great deal of diversity on their boards. And you see more and more companies actually embracing that. So the notion that I can't find people who know my industry really well that happen to be female, A, that's a dated notion in and of itself, probably in just about any industry. And B is, why would you want to stack a board with people who know your industry and only know your industry as opposed to people who might have more diverse perspectives?
Where did this passion come from for you? And I'll ask because I have a 7-year-old daughter, and so I think of the world very differently as a parent of a young girl. For you, what lit the candle or flipped the switch?
I don't know. I was brought up that way. I think my parents did a good job of raising my brothers and sister and I. We were always taught to respect people and the richness. When you have a dinner party, have you ever noticed that if you have everybody that comes from the same walk of life, it's dead boring? Right. And if you've got an artist and an unemployed person and a teacher, a nurse, business executive.
And a couple of bottles of red wine.
A couple of bottles of red wine, you end up with a really interesting, fun conversation.
Yeah.
I mean, I remember once we had some Chinese visitors 25 years ago up to our cottage, and the man who drove us up was from Pakistan, and they got into this wonderful discussion about the role of parents in a marriage and between the two cultures. And Irene and I just sat watching it go, and it was the most fascinating conversation with people, yelling to make the point, not disagreeing, but yelling to make a point from all these different cultures. It was just wonderful to watch. And,
You're not planning on arranging the marriage of your girl
No.
in grade 10, right?
I wouldn't have the opportunity. Perry makes her own decisions.
I want to talk about fintech or insurtech, as it's known in the insurance space. There has been so much going on, and if you Google Manulife and put insurtech in there, many of your initiatives show up. The hackathon, Loft. Tell us about your strategy, buy versus build, how you think about allocating resources, what the future will look like.
Well, if you're a customer-centric company, which we are, technology enables you to do a whole bunch of things that you couldn't think feasible before. And I think just about any business in the world is trying to embrace technology and what it can do. And, some of the things that we've done, we're very proud of. We're in North America, we have the Vitality program. In Asia, we call it Manulife Move, but basically uses wearable devices to give us information about how people are, handling themselves physically, and with that, diet and other things. So if they're staying active and doing reasonable things with their body, we give them a break on their insurance. The interesting thing is when we do focus groups, it's not so much that they can get the discounts that drives them. They're actually smart enough to understand behavioral economics that the little prods, when you give them one of these funny little awards that you've climbed a mountain or something, or they get a $20 Amazon gift card or something like that because they've stayed healthy. That's as big as an incentive or a bigger drive for them as getting a discount on their insurance, which can add up to hundreds of dollars a year. It's not insignificant, but they're smart. They recognize those little prods, those little things. My daughter and I compete against each other.
Who's winning?
She always wins, but occasionally, and it keeps you on your game. But that's only one of the things. We also used advanced analytics, to take a look at our underwriting process. And we examined the underwriting process. When people documented, they actually made a whiteboard video of it, and they talked about how bad it was. They've got this great little cartoon of somebody all excited about trying to buy insurance, and then it says, and then you have to give samples of fluids in your office, and you work in an open office concept. And they've got this little man with these, it's not very pleasant. So we're making fun of ourselves, trying to remind everybody how bad the customer experience is. So recently with advanced analytics, we've determined that we don't need so-called fluids for anything up to, I think it's $1 million of insurance, maybe $2 million. Also, some of that led to insuring people with HIV for the first time. First company in Canada to do that.
What are the things that you're looking at that will equate to pee in a cup? Because you need to look at risk. Is it job? Is it how we use Facebook? What is it?
Well, advanced analytics, and one could say you could do it, it's just good statistical analysis. We actually looked at how much value we get from the underwriting process versus the cost of the underwriting process, versus the diagnostic discriminant. And basically, if we see your height and weight and a few other things and you're not being treated for something and you're below a certain age, the odds of us discovering something by examining that stuff,
right,
either blood or the other, is very small relative to the cost, the hassle, and everything else. So, but before we could make that conclusion, we had to run through millions of reams of data in order to make those determinations, but we feel pretty solid about them.
There are a lot of names just starting to get momentum in the ears and eyes of consumers. League is one. You have an investment in League. There's peer-to-peer insurance. There's instant everything, killer prices, Big Heart from Lemonade. There's just tons of stuff happening here. What would you say are some of the big themes? Is it AI? Is it blockchain? What are the themes that are going to affect the insurance industry in particular?
Well, AI is a huge component of it. People dealing directly through the internet to interface with their transactions. Now, not just insurance, but anything to do with wealth and so on is a big dynamic. Wearables are a big dynamic. Actually, some of you mentioned some really interesting examples, but some of the most exciting stuff is actually happening in Asia. In China, you can almost live on WeChat. I would encourage people, if you want to, Google WeChat New York Times video, and you'll get a video done by the New York Times that talks about what WeChat is capable of. And it's unlike, for those who don't know, WeChat is like a combination of Amazon, eBay, PayPal, Facebook, and online banking, and a few other things, all rolled into one. And you can almost manage every aspect of your life on WeChat. So we can make people aware of us through WeChat. We can sell a policy through WeChat. They can pay for it on WeChat. We can pay them benefits on WeChat, and they can change any investment allocations and so on, or whatever they want to do in terms of administering their policy, changing their address. The whole thing can be done on WeChat, and we do that regularly. So it's phenomenal. People like to think Silicon Valley is the hotbed of innovation. Increasingly, there's a balance between what's going on in Asia.
How do you think about margins over time? Because if we think simplistically on the investment side, the robo-advisors are, call it 0.7% versus the old school mutual fund MERs of 2.3%. As the shift continues...
Or zero.
Or
the most successful robo-advisor is a tiny little startup called Charles Schwab.
Yeah.
And they give it away to their customers for free.
Yeah. So let's take that model to insurance. What happens to margins at Manulife if that's the future?
Well, first of all, remember, insurance is only a small piece. 70% of our insurance is being sold in Asia. That's on a different developmental stage. And frankly, the margins are a lot better than they are here in North America. But wealth management, yes, there is margin compression. But if you have a big diversity of offerings and you're offering real offerings, not just, hugging the index, cheap beta people can get through the index. There's no question. But we're having our greatest success actually selling to the largest sovereign wealth funds in the world. They can buy all the cheap beta they want, right? At next to nothing, at zero cost. But what they pay for is consistent alpha generation, which is what we do. We have terrific insight into all aspects of the economy, not just publicly traded, but private assets of all forms, everything from oil and gas, real estate, timber. Those are interesting, chunky assets that give us very interesting insights into what's going on. We also have a very extensive private debt portfolio that gives us interesting views of what's going on in the market that is not publicly traded. And then we've got global insights because we've got people on the ground around the world. So our portfolio managers actually take great advantage of the international networks that exist within the company. So, when you had September of 2015, when people were saying China is hitting a wall, they're on the phone. Are you guys hitting a wall? No, you don't see a wall? Apparently there's a wall. According to the local newspaper, Wall Street Journal says there's a wall. No, you don't see the wall. There wasn't a wall. And that also occurred in February of 2016. Remember, the Fed was all upset about, oh my God, there are problems in other markets that we have to be conscious of. And the market sold off so significantly because China was slowing down. Well, did China slow down? I mean, of course China's slowing down a little bit. You can't maintain a 10% growth rate when your economy is the second largest economy in the world.
We just got
actually on that score. People love this statistic. China's slowing down. It says around 7% growth rate now. You all know the country of Australia. 2 years of growth in China is in the entire economy of Australia. Fred, you have a Mercedes, right? No. German cars, Germans are very productive people, right? Amongst the highest productivity in the world. They make all kinds of great things, including their cars, but instruments, all kinds of medical equipment, you name it. 5 years growth in China is in the entire economy of Germany. And they've been working that economy for a long time. So China's a big place, and it's only a little piece. That's only a little piece of Asia.
Yeah. I'm going to sneak in one last question here. Yeah. 23andMe. Low-cost genetic screening. I had a friend come over to my house last night. She just paid the $250 to find out all sorts of things about her genetic makeup. How does that alter the dynamics for life insurance? And what are the ethical issues that may bring that you have to think through?
Well, that's a long conversation.
And you have a minute.
No, we're not afraid of it. What we've done heretofore is basically ask the insurance industry in North America, not in the unique Manulife, if you have information, we want to have that information too. So there's what we call symmetry of information. And if we don't have a symmetry of information, if I'm allowed to have certain information about my health that other people don't have, and therefore I buy a $10 million policy knowing that I'm subject to some risk that is unknown to the insurer, I'm not taking advantage of the insurer. I am at the first instance, but I'm just driving up the cost for everybody else in the room, right? And that's generally supported view, that there should be some symmetry of information. So we've never required anybody to take a genetic test, but we say if you have a genetic test, please share it with us. There are some, people that would say, no, you should not use genetic tests. They seem to think it's okay that we ask people about their weight, their height, their family history, what's in their arteries, and so on and so forth, but not look at a genetic test. I don't quite understand it. The other thing, though, I'd also say is that, I know a fellow who's got a company called Deep Genomics, and the real experts, and I'm not going to say anything about that genetic test that you just said, but some of these simplified versions that are available to people, they can scare the hell out of people and give them all kinds of incorrect information. The amount of data analytics that need to be applied to a genetic test for you to draw any significant conclusions about things that you should do are way above what is being provided. And that's why many countries in the world actually do not allow that type of thing, and it certainly don't allow it without proper counseling, because it can scare the living daylights out of people and cause them to do things that are quite irrational based on extremely low probability. I talked to a person who had a genetic test, and they said they found out that the probability of getting some disease was 20 times that of the general population, and they were quite upset about it. And then they discovered that, the disease...
There was one case in 7 billion people?
Yeah, much greater risk that they were going to get hit by lightning.
Right.
Than this thing. I mean, people have this... Anyway, it's important to apply really strong statistical analysis, and genetics is extremely complex area.
I wish we had all afternoon to speak.
I wish we did, too.
Unfortunately, we don't. That is our time. Thank you very much for making the time for us to speak.
Thank you, Bruce.
We appreciate it. And you just stay here. Over to you.
Good afternoon, everyone. I'm Gillian Riley, President-elect of the Canadian Club of Toronto. Wow, Don, that was outstanding. On behalf of the Canadian Club and all the guests here today, we want to thank you for sharing your fascinating insights and first-hand experience with all of us. When we created our Global Leaders Series, you were the type of guest we had in mind. Rich in international experience, highly regarded, and thoroughly engaging. We appreciate your deep understanding of the Asian markets and your explanation of why Canadians should be considering the many possibilities that growth in the region provides. As you pointed out, Canada is already benefiting from the region's strong growth. Imports have increased, and Asian investments have contributed to positive economic growth here at home. We also admire the success Manulife is having in Canada, the US, and Asia. Clearly, your leadership is providing that success. I particularly like the diversity comments that you made here today and shared with the group, your commitment to technology and data and analytics, some important insights. Also, the little tip that I take away from today, which I think is relevant in North America, and as you said, it's relevant in Asia, listen first and talk later. It's something I'm taking away. Don, please accept our best wishes for continued success, and thank you for being at our podium today. Now, Bruce, you did an excellent job. As usual, you're a very engaging conversationalist, and we know you'll come back and do more of these in upcoming panels, so thank you to Bruce as well. Before we conclude, let me extend another round of thanks to today's event sponsors, Borden, Ladner, Gervais, and Scotiabank. We would also like to thank mediaevents.ca, Canada's online events space, and VVC for live streaming today's event. This concludes our program for today. To learn more about the club, please visit us at canadianclub.org. Thank you for joining us, and have a wonderful day.